If you don't know how much you spend on household expenses and entertainment every month, you are not alone. ANZ reports that more than a third of Australians are struggling with budgeting. It's also estimated that 1.2 million Australians never learned how to save. Welcome to Dollars and Dreams, the podcast designed to empower you to take control of your personal and business finance. You know, the very thought of money and finance can often send chills down your spine and stir up fear of the unknown. But let's change that narrative together. Through this podcast, my goal is to not only to provide you with useful information, but also to inspire and motivate you to take action towards your own financial goals. Let's rewrite your money story together. Hello and welcome to my very first episode of Dollars and Dreams. For those of you who don't know me, I'm Jen Richardson. I'm founder of 123 Financial Group and the digital platform jenrichardson.co. In today's episode, I want to go through a way that I structure for a lot of my clients their banking system. And it's a 6 bank account system that I use for all of my clients, and it's the one that I have used for myself. What 6 bank accounts does is it gives you control over your money and your spending, and it allows you to remove the stress that's associated with money. And I say that this is the system that I use because a few years ago when my children were early teens, I earn a good income, but I never knew where my money was going, and there was nothing left at the end of my pay cycle. And I said to my husband one day, I need to get control of our money. I need to find out where we're spending our money. So I designed this 6 bank account system that gave me full control. It also gave me the ability to work out where I was actually spending my money. And it is the foundation of my course in Got Money Honey, which is called My Money Makeover. Now, one of the things that I hear quite often with people when they are told that I want them to create 6 bank accounts and to give them control over their money is, oh my God, I can't control 6 bank accounts, or how am I going to ever get 6 bank accounts to work for me? It's important to remember that you really only use 2, maybe 3 of those accounts. The rest of them are siloing your money so that it is there for a purpose, so that you don't overspend and that you don't not start working for goals that you have in your life. So financial freedom is about having control of your money so that you don't stress over money. It's about having the right mindset over your money and you having control over where your money goes. I don't think I can ever stress enough how much we need to control our money, because money likes to be controlled. And if you don't, before you know it, you've tapped and goed and we're moving on. So my 6 bank accounts that I use, and I'll go through those in a minute, but I wanted to just explain why I've set up 6 bank accounts. So back in the day when our grandparents and our great-grandparents were paid, and of course they were paid in cash, because back then there was no electronic transactions, there was no internet, there was no credit cards, and of course there was much less debt. So they would come home from work on payday with their little envelope of cash, and they would sit down and they would divide up that income into certain envelopes set aside for different things, whether that be pay the bills or what they were going to live on or what they were saving for a holiday. And so they saved for what needed to be bought, because they couldn't go and use their credit card, they couldn't go and tap, and there was no buy now, pay later. So my 6 bank account system that I use as the foundation inside My Money Makeover is there to replicate the cash system. And some of you may have seen the cash stuffing that is the rage on social media and Instagram, where people are creating envelopes and putting cash in there to set aside. Now, it does give you great budgetary control. It does mean that you can't overspend, because one of the things that we find now with everybody, we tap and go, is that you just keep tapping away and you never actually know what you've spent. You can come home from a weekend away, or you can come home from a shopping trip and not actually know how much you've spent. When you actually spend cash and you hand cash over at the register, it actually registers in the pain center of our brains. So there's a different association that we have with spending when we spend cash as opposed to when we tap with our credit card or debit cards. So that's the thinking behind the cash stuffing that happens now. And of course, that was the system that used to be around in our forefathers' days. The disadvantages of cash stuffing and the cash envelope system is that you have no security over your money. You have to hope that you don't get robbed and your cash stuffing envelopes get stolen. You're also shopping with cash, so if you drop your wallet or lose your handbag, you lose the money. At least if you're doing it with tap and go or your debit cards and things, you do have that security. So there are some pros and cons to the cash stuffing or the cash envelope system. But with my 6 bank accounts, you will get the ability to use that foundation of the cash stuffing or the foundation of the envelope system that our grandparents used without the risks. The other side of cash stuffing is not a lot of places now are geared up to take cash as payment. So you would have to go to the bank, put the money into your bank account and then pay. And of course, our rent payments or our mortgage payments, you can't pay those in cash. So you still do need to go to the bank. By putting the 6 bank accounts that I have in place, you have control over your money. Money is siloed for its purpose and you can't overspend. So it gives you the ability to not stress over money. It gives you the ability to have full control over your money, and it gives you the ability to know that you have money set aside to cover those bills when they're due or the emergency that comes up. So I'll go through the 6 bank accounts and what they are there for, and then we might just do a little bit of a recap at the end, because I think it's important that in all of this process that you understand how money mindset ties in with these bank accounts. The other thing that, before I jump into the bank accounts, is I quite often hear people say that they can't do the 6 bank accounts because they don't have enough money, or they'll say to me, Jen, how lovely would it be that I had enough money that I could divide it up between 6 bank accounts? The bank accounts don't have an amount that they need into it, but what they do is they move money from what would be your main account where you get paid into different accounts for different purposes. And of course, when money is tight, that is when it is even more important to have control over your money. Because of course, if money's not tight, it doesn't matter if you overspend, or if money's not tight, it doesn't matter because there's money coming in to cover those bills when they're due. Budgetary control and control over your money is paramount when money is tight. At the moment, we've got cost of living increasing, we've got interest rates rising, which is increasing our mortgage payments and or our rent payments. And of course, that's when you need to put some budgetary control over your money so that you can meet those obligations when you need to. All right, so let me go through the 6 bank accounts. I'll go through them and just explain what we use them for. And at the end, I'll tell you what type of accounts you should have. So in My Money Makeover, which is one of our training courses on Got Money Honey, which you can find over at jenrichardson.co, we go through these 6 bank accounts in great detail. I do have a download that I can get for you, and we'll put those as part of your show notes that you can download from here, or reach out to us and we can give you that illustration. So the first bank account that we have in the Honey House is what we call our bills account. Now, this is the account where all of your income gets deposited into. So your pay, your interest on bank accounts, any dividends, if you're a sole trader or a business owner, this is where your disposable income goes in. So if you're a business, not your business income, but the money that the business is paying you as an income for running the business. The bills account is important because what it does is it saves for those bills. So you need to work out how much your bills are a year. So how much your mortgage payment is, how much your water, electricity, gas, the registration on your car, anything that is paid that isn't a day-to-day expense. So what you need to do is you need to do a budget and work out how much of each pay you need to keep in that account to cover your car registration, for example. So let's just use an example. Let's say your car registration is $520 and you're paid weekly. You would need to leave $10 in that account to cover your registration on your car. So the important thing that you need to do before you work out that is you need to work out what your costs are per year or per month on all of your bills. So there is a little bit of work to do. What you should do is sit down and work out how much you spend on each of those things. So if you've got a house, how much is your mortgage payment? How much is the insurance on your house? How much is your car registration, the insurance on your car, and all of those costs? So get a total for the year and then divide it by how many pays you get a year. So if you're paid on a weekly basis, you would divide that by 52. If you're paid on a fortnightly basis, you would divide it by 26. And of course, monthly, you would divide it by 12. And this is important because you need to make sure that you have enough money set aside in that account so that when your bills come in, the money is sitting there waiting to pay it. This account, you do not need any debit cards or anything for it because everything will be paid by electronic transfer. It should be an account that earns interest, so a high interest account. Now, if you have a mortgage, potentially you could set this one off as an offset account against your mortgage so that you're paying less interest on your home loan. So it is important, remember, no debit card on this because this is not an account that you are going to be tapping and going on. You should, where you can, set up your bills to come out automatically so that they are paid and you don't incur any late payments. So if your telephone bill is paid monthly, just set that up as an automatic payment out and you've set the money aside. That is the most important one in everything of these 6 bank accounts because it's the one that really will control your money. The second account that we have is what we call our everyday spending account. Now, this is the account that will have a tap and go because it's the one that you'll do your grocery shopping with, pay for the fuel on your car, and everything that you spend on a day-to-day basis from one payday to the next payday. So it is the one that you'll pay your public transport in. And of course, it will get a direct payment from your bills account the day after payday. And I'll go through that a little bit later in the podcast. It's important that you realize how much you are spending on a week-to-week basis or a fortnightly basis if you're paid fortnightly, because from this account, it should clear in the fortnight or the week. Now, that's not saying you go and spend everything that's left. It means that you should be budgeting how much you need for groceries, how much you need for public transport, how much you need for fuel in that cycle. And it is important that if you have no money left in that account, you cannot borrow money from somewhere else. And that's important. So I'll say that again. You cannot borrow money from somewhere else. That gives you the budgetary control that you are not overspending on, say, your grocery bills. Now, inside My Money Makeover, we'll go through lots of ways that you can work out how you're spending and you're saving on your daily grocery or your weekly grocery bills, and how you can put some plans in place to reduce your spending. Because it doesn't matter how good your budgetary control is, if you're not reducing your spending or increasing your income, you don't get ahead. And that's an important concept that you need to understand. So remember, this account is only to be used for your day-to-day living costs from one pay cycle to the next pay cycle. This one doesn't need to earn interest because it doesn't have money left in there on a regular basis. A deposit will go in the day after your payday from your bills account, and you will tap and go, and there should be nothing left. If there is regularly money left in this account, it means that you haven't done your budget correctly and you're over budgeting for what you should spend. And that's a good thing. Does mean though that if you've got money left there, I'll talk about in a minute where we can put it or what you can do, but it does mean that you should relook at your budget. The third account we have is what we call your luxury account, or this is the nice things in life that you get to do. So it's where you save for things like your grocery shopping, where you save for things like your clothes and shoes, your brunches with girlfriends, your nights at the pub with your mates, and all the things that give you enjoyment in life. So it's not the day-to-day costs that we have that gets paid out of the everyday account. These are the things that you spend money on that you enjoy doing. And let's face it, that's why we work. We don't work to survive. We work to enjoy things. So we would not always spend this money on a week-to-week basis, because if you're saving up for a new pair of shoes or a new dress, or you've got a wedding coming up to that's you're going to have accommodation or gifts for the bride and groom, then this is the account that you save in. It doesn't and shouldn't be used for everyday living costs. So it will be those things that you do infrequently but are important in life. Remember what I said to the start. This is about getting budgetary control. So if you know you have a long weekend coming up that you want to save for, maybe you'll reduce your grocery shopping so that you've got some surplus and you can move it across to your luxury account. So I did say I'd come back to what happens if you've got money left in your everyday account. So you can do one of two things. If you're saving for some extra luxuries, you can transfer the balance at the end of the pay cycle to your luxuries account. Or of course, you can put it back to your bills account if you know your bills are going up a little bit more, or you can put it to one of your savings account, which is what we're going to jump into now. So the most important account that you can have after your bills account is your what we call an OMG account here, or your emergency fund. Every single one of us at some stage in our life is going to have an emergency comes up. The washing machine blows up, the fridge dies, the kids come home with a medical issue that you need to pay for medical treatment, the dog gets injured and you've got to go and pay a vet bill. Those emergencies are a fact of life. As good budgetary control people, we need to make sure that we're saving for that emergency when it happens. So the idea of the emergency fund is so that you don't panic when that bill comes in and you say those words, oh my God, how am I going to pay for that? Which is why we call our account the OMG account. So that one is a fund that should earn, a bank account that should earn interest. Again, if you have a mortgage, you probably should be setting that off as an offset against your mortgage to reduce the amount of interest that you're paying. And it is a fund that should have somewhere between 3 to 6 months of your living costs saved up. The emergency fund is your safety net, and it's a safety net that you know you're going to be okay if something happens, or if you potentially lose your job, or you really just don't want to be in a relationship that you're in. This is the fund that gives you the safety net to say, I'm out of here. Whether that be you leave your job or you leave a relationship, or, as I said, the washing machine breaks down. Again, you need to budget to work out how much you need to put aside to get that 3 months to 6 months of savings aside. The reason that we have an emergency fund, and I say it is the second most important fund after your bills account, is because your emergency fund stops you doing short-term credit when things go wrong. So if your fridge broke down and you didn't have an emergency or an OMG account, you would be tempted to use your credit card to buy a new fridge, because let's face it, we can't live without a fridge. Or when that a medical bill comes in that you need to pay for your child, or the vet bill for your dog, you're not going to leave those bills aside. You will then turn to short-term funding. And we see these ads on the television all the time about how you're going to pay for something, and the wallet wizard comes in. Those short-term funding charge you a ridiculous amount of interest. The emergency account is what will save you from that. And of course, if you're paying large amounts of interest either on a credit card, or short-term lending, or store cards, that is transferring your own personal financial wealth to someone else. Banks are making record profits. Don't add your hard-earned money to their profits. And of course, the emergency fund gets an automatic transfer out of your bills account the day after payday. The last two accounts that I want to talk about are what I call your short-term savings account and your long-term savings account. Short-term savings are anything that we would typically say you're saving to purchase within the next 12 months, and your long-term savings account is anything over and above 12 months. So you may be saving for a family holiday next Christmas. That would go into your short-term savings account because you will be using that money within the 12 months. Your long-term savings account might be you're saving for a new car, you might be saving for a new lounge, you might be saving for an investment property, or it could be that you're actually adding money to your superannuation. Don't be confused that long-term savings account has to be in a bank account. For me personally, I'm saving at the moment for a new kitchen, so that is in my long-term savings account. And I also add extra to my superannuation, and I look at that as my long-term savings. My short-term savings is just family holidays. That's my main one that I do all the time. So let's go back to how these bank accounts get their money. If you remember at the start, I said that all of your income comes into your bills account. What I want you to do is set up the day after your payday. You should do an automatic payment out of your bills account to those 5 other accounts. The reason being we do it the day after is some banks will do their automatic transfers first thing in the morning, and your wages may not come in till lunchtime or even sometimes later in the afternoon. You don't want to set all of this up and then all of a sudden it fails and you think you've got the money transferred and you don't. So it's important that the automatic transfers happen the day after your payday. The automatic transfer is there because as humans, if something is left to us, we get busy. Instead of doing it the day after payday, we might do it 2-3 days after payday, and all of a sudden the whole system falls apart. So it is important that you set up automatic payments to your everyday account, your luxury account, your emergency fund account, your short-term and your long-term savings accounts the day after. The beauty of doing that is it is automated, so you don't have to worry about how you're going to control your money. All of a sudden, the day after your payday, the money is in your everyday account and you can go do your grocery shopping. You can update your travel cards. You can put fuel in your car and you're fine. It also makes sure that you do your savings plan. If you don't do your savings plan, all of a sudden, somewhere down the track, you don't have any savings, you don't have that emergency fund, and the emergency happens. And again, we've turned to short-term credit. Your emergency fund should be set up before you worry about paying out any debts. And it is important, obviously, that you pay out your debts, but that's a topic for another podcast. We'll talk about how you can put plans in place to pay out your credit card debts or your buy now, pay later debts and get yourself into financial freedom with loans. So keep an eye out for that one coming very soon. But the idea of that emergency account and why I say it is more important to get that in place than paying down your debt is it will stop you adding to any debts that you've got. So if you already have credit card debt and an emergency comes up and you don't have an emergency fund, all of a sudden you've got more credit card debt or more short-term lending debt. So it is important, and this is the cornerstone of creating your banking system so that you have control of your money. So just a quick recap, your bills account is where your income comes in, and it's where you save for your payments. There should be no debit card on that, so you can't tap and go, because it is only to be used for those bills that happen on a regular basis. Your everyday spending account is designed for your everyday living costs, and it should only be an amount that covers you from payday to payday. It does need a tap and go. It doesn't need to be earning any interest. Your luxury account can have a tap and go as well, because that's an account that you're going to use when you go shopping for your clothes, shoes, or when you go away for the weekend. It can earn interest, although it's not all that important because it won't have a lot of money in it. Your emergency fund should not have a tap and go, because that's one that is going to sit there as the safety net for you, and it should earn interest. Short-term and long-term savings, again, they do not have a tap and go. You will not pay out of those, and it should earn interest, or of course any of those accounts can offset your mortgage if you have a mortgage on your home. It is important that when you need to pay something from your emergency fund, or you're ready to buy that lounge that you've been saving up for, transfer your money from your emergency fund or your short or long-term savings back into your bills account. That way you can see that the money has gone out and you have full control. So remember, your emergency fund, your short-term savings, and your long-term savings should not pay anything from them except back to your bills account to pay from there. Now, I know that sounds complicated. It isn't when you sit down and do it. As I said, we've got a little diagram that we can make available to you. If you just put a comment below where you're watching this podcast, or get in touch with us at jenrichardson.co, and I can get you that little diagram which will explain all of this to you. It is important that you put it in place as soon as possible. Now, whilst this 6 bank accounts is what will give you budgetary control, I cannot stress enough for you that you need to look at where you are spending your money. There is no magic wand to getting ahead financially other than getting control of how you spend your money. And of course, we've just been through the Black Friday sales where we're told to buy while everything is cheap. That is part of your mindset. If you've got all your money set aside, you can spend, and it's what you've set aside in those 6 bank accounts for that spending. So I hope that has given you a little bit of help about how to have budgetary control over your money. The 6 bank accounts that you need to set up so that you have control. And that gives you the ability then just to tap when your everyday spending account is gone. You know you've spent your weekly allowance and you need to find some cooking or whatever it is in what you have at home. It is important that these 6 bank accounts only work if you only use those accounts for what they're designed for. So you cannot do your grocery shopping out of your bills account. You cannot pay for your emergency as it comes from your luxury account. This will give you the envelope or the cash stuffing system that is there to give you control over your money. All right, well, that's it for me for today. I hope that has been super helpful for you. Let me assure you, this is the bank account system that I use, and it is the bank account system that will save each and every one of you from losing control of your money, and it will give you the direction you need to change your financial situation and start building your own personal wealth to give you financial freedom. I'd love for you to hit the click and subscribe button so that you can get all of our new content as it comes. And of course, share this podcast with anybody else that you know that needs help with where they're spending their money. That's it for me. Thank you for listening to Dollars and Dreams, and I look forward to seeing you next week in our next podcast. Remember, the advice shared in Dollars and Dreams is general in nature and it does not consider your own personal circumstances. Dollars and Dreams is for educational purposes only and should not be relied upon to make investment or financial decisions. If you need more help, please reach out to a financial advisor for tailored personal advice. Don't forget to click that subscribe button so you don't miss out on future content. And please leave me a review. Your feedback really helps me to reach other people chasing their money dreams. You can find me over on Facebook and Instagram to connect with me. You will find the link in the bio or head over to my website at jenrichardson.co where you will find free content and learning tools.